Hello everyone. Welcome to another chapter of Unit of Technical Analysis. Uh, Before this, this is going to be specifically chapter number 7, the 258 support lines. Now, this is a very important and critical chapter from the overall perspective because this will be talking about your risk management and second is about your stop losses, which is very important. Now, why this is important? Because almost 90% of the traders who are working into the market do make losses. Rather, they almost exhaust their capital too, right? So that's why stop loss and risk management is very critical. Until unless you don't know how to put your stop losses or to manage your risk, things would be very, very, very difficult for you. I again repeat, things would be very, very, very difficult. So that's why risk management and putting your stop losses are very important. It's not necessary that every time you'll be going into the market and the market would be going in your directions only. Even now and then the market gives retracements back and we need to know exactly how this works out, and that's why placing your stop losses at the exact point is very important and managing your risk is very important, right? Now before we go further, let's quickly recap because the last chapter that we had, chapter 6, probably I guess it was a long time back, that is chapter 6, Fibonacci multi-dimension reversals which were there. This was there on 25th of March 2022. I guess it's almost been 3 months. I am really sorry, beg your pardon for that part, because I guess it was more of focus on WD Khan at that part. I was reading this book, Tunnel Through the Air, which was quite interesting and got more of into the details of that. So really sorry for that. Now let's before we start this chapter, let's have a quick recap of all the things together so that we'll have a brief summary. I'll take not more than 5 minutes for that. We started with chapter 1, which was bull and bear cycle. We came to chapter 2, which is bear cycle, and third was the bull cycle. Now let me just quickly summarize all these 3 chapters together for you guys. Right. So this were the last 4 bull and bear cycle that we studied all together. What we saw in the first chapter is whenever there is a bull cycle which has been formed and we have a range which is starting on Fibonacci from 0 to 1, that is, let's say this bear cycle has ended and we consider this as the 0 and the end of the bull cycle is being considered as 1. So the next bear cycle which will be coming, the retracement for that coming back would be mostly at 2 locations. This is either 0.236, either 0.236 of the bull bear cycle, or it would be at 0.5 level, right? So these are the 2 major levels that we saw where the retracement comes down to. And this is what we call as unit of technical analysis, because we have a unit now where we are able to measure what exactly is happening in the market and how that has been happening. Because there would be retracements. This would be there in all the time frames which are there. You talk about monthly time frame, you talk about weekly time frame, daily time frame, 4 hours, 2 hours, 1 hour, 15 minutes, 5 minutes. Yes, definitely you'll be able to get those retracements, and we need to know how these retracements happen, because every time frame has a different retracement that we need to have and consider for, right? Then we saw the bull cycle, how the bull cycle happens. For example, let's say if this is the bull cycle, it goes up, it comes back, gives me a retracement, and then starts moving up, right? So this is how it generally happens, and that is how the market keeps on going up, right? And then we saw the bear cycle. The bear cycle again happens in a very similar way, right? Once you have a bull cycle, probably the bear cycle which is there again coming back to a retracement and going down, right? So there will be every now and then very different kinds of retracements which will be happening into the market, which we need to be very thorough about and try to understand how this happens, right? So 1, 2, 3 chapters have been done. We have discussed about trading Fibonacci levels. Now we know about, on the basis of trading Fibonacci levels, how we need to go further on those things. For example, if I just tell you, right, if this is a cycle that we have considered, and if you consider an extension for that, right, it will be coming exactly to various levels, which is 1.618, right? So if I'm trading at this part, my first target would be 1.272, and after that it would be 1.618. And if the market goes further beyond that, further targets should be there. So mostly Fibonacci extensions is this is how it works together. Then our next chapter was how to trade the market 50% retracements. Again, this is very, very critical. Why? Because the market does give you 50% retracements every now and then. Every particular time there will be retracements, and the retracement should be minimum 50%. If it is less than 50%, or maybe say somewhere around 618, then the market is really strong. It would be going up further, but it will be giving you the first retracement, which will be coming back to 0.5%. Right. Next, after that, we had seen Fibonacci multiple dimensions. I'll just quickly explain you how this is, because this was the last chapter. Now, let's say at the end start, I don't know anything, right? So I'm just seeing the market. It starts from the low, it goes, creates a high, it comes back, right? So this is where probably somewhere around my entry is there, right? Once I take an entry, after that, the market starts moving up gradually, and it takes various supports, right? So the target is 1.272, 1.618, 2, and further, right? Once you know that, okay, you have completed a target. So this is the first Fibonacci that has been formed. What we do with that is we form another Fibonacci. This is Fibonacci 2, which is the entire range. This is from the low to the high. So if you see over here, this is the high which has been considered. This is the low which has been considered. So you know this is the complete range which has been formed, right? The third and multiple dimension Fibonacci is the first Fibonacci, the second Fibonacci. What is the third multiple dimension? Is the reversals, which are very critical. So you start with the low, you see there is a high which is being formed, right? And after that, you again get a reversal, right? So reversals again, I come down to those specific parts, and whatever has been mostly the target over here. For example, if it was 1.272 target, here also you'll be getting the same target. So you know where exactly this will become. For example, if it has just crossed above this 1.272, here also it will be same thing. It will be just crossing above this 1.272 level and then, right? So this is what is multi-dimensions together on that part, right? Now we come to the most important part, as I told you, chapter 7, which is 258 support lines, support levels, right? Now for this, let's go to an entirely new chart, right? This is where probably the market did start. So let's start somewhere around all this parts. I'll cut down with the volumes because this is not important. We don't look at the volumes tomorrow. Excuse me. Right now, if I need to trade into the market, the most important thing for me is having a right entry, trailing my stop loss, and after that a right exit, right? So these are the three most important and critical things for us to understand in the market. So this is right entry, trailing my SL, or so once you have an entry, after that you should put down a stop loss. All right. So once you have your stop loss intact, we'll go to the second part also. Let's try to get that in details. Let's say, for example, I start somewhere around at this level. And I'm still not very sure how my target is. So, right. So what I do is I take my level 1, I'll take my level 0 and 1. Let me take this on the right hand side so that we are able to understand both the things together. So this is basically for understanding purpose. You can do it as per your preference, right? So for example, let's say this is my low, this is my high. Then after that, again, high has been formed and again the market comes down, right? See, over here, I didn't get a specific range, right? Or if you can say that, okay, fine, this was my 0.5 level, right? I take a trade over here, right? But after taking a trade, if the market starts moving up, I should start trading my stop loss, right? This is the first and most important thing. See, what happens in the market is my first priority is saving my capital, because if I have my capital intact together with me, I would be able to take future trades. I would be able to take risk. I'll be able to make mistakes into the market. But if you don't have money, the capital with you, you would not be able to trade. And this is one of the most important and biggest mistakes that most of the traders, at least the early traders who get into the market on some short knowledge, do make this kind of mistakes. I also made this mistake, so I know how it feels, how you work across with those parts. So very critical that you know about your stop losses where they have to be put across, right? So if you have taken a trade over here, once you take a trade, you should stop trailing your stop loss, because what will be happening is once you know that okay, the market starts moving up, you should be able to know where exactly you should be able to trail your stop loss. These are very important parts, right? So I'll just give you a few examples starting from this point. See, what happened is the market did move up, then the market came down, right? You consider this point or maybe the top point, either way it's going to be same, right? See, here the market did come down, right? And at this part, your stop loss would be at the bottom, right? Once you know that your market has moved or crossed the previous high, you should start trading your stop loss. How this stop loss should be trailed? Let's go one by one. So here what happened is the market again moved up, and the next day's candle was just below this part, right? Now understand one thing. You should be able to take an entry only when you get an retracement, right? And what is the retracement range? This retracement should be coming into this zone. Very important. At times it will go beyond this zone. No worries. Let it come. Let it come back. Let it give you a retracement, and then only you take an entry. Otherwise, you don't take an entry into the market. Right? This is very critical. Understand, guys. Your entry level is very important. This you'll be able to judge on the basis of your experience. You may be aware how these things happen. If you are not aware, don't just rush into the market. Let the market settle down, because if the market is going up, it would definitely come back. It would give you a retracement. So you have to take your trades only and only during this retracement times. Very clear. This is the rule which is there. You need to work on the basis of the rules which are there. If you are not able to work on the basis of the rules, you won't be able to sustain into the market, right? Right now, irrespective of the time period, this is a monthly time period, but if you are considering, the charts would be very much similar on all the time frames. So if you even ignore this is a month. If you consider this as a minute chart, or maybe as high as a weekly chart or monthly chart, so it's all going to be the same. Let's try to study that. So this was my low, this was the high that I got, and after that this was the retracement I got, right? Again, in retracement, when you get this retracements, again you'll be getting some price actions at the lower level. Let's say you get into a 5-minute chart, 15-minute chart, 1-minute chart. I go basically into the details of 1-minute chart because this is the lowest, and I get some accurate results on the basis of that, including indicators, RSI, MACD. So much more easier to get into smaller time frames when you want to exactly take a trade, right? So you got a range. After that, you got a reversal. You got an entry into the market. Suppose, right? So once you have an entry into the market, what is the next thing that we need to do? Right? The next thing and most important thing is start trailing your stop loss. Now, how these stop loss are to be trailed? This is very important, right? So let's say you have this range, the market did come back, you got an entry somewhere around this levels, not exactly at the low levels, or maybe I say that okay, this was somewhere around at the 1,000 level, right? If it is at the 1,000 level overall, because we say that okay, we are very safe traders, we don't get exactly as per that. So when it did cross 0.5 level, that is 973, you get into an entry, right? So most of the time the market does come down below that also, right? Here you take an entry. Now the first rule is, once the market retracement has been done, when you take an entry, after the entry, your stop loss should be maybe below zero level, right? This is the first part. I know this becomes at parts very difficult because you are not aware what has been happening, right? So what I would suggest is, let the market come down completely. Once it has formed a low point, after that, in a smaller time frame, you will be again getting those retracements. Until unless you get these retracements, you don't get into the market, right? Let me just give you an example, some recent ones, right? So for example, let's say this is my daily time frame. So this is my daily time frame. So market gives me a range, it comes back, right? So when did it come back? Yep, it gave me a retracement, which is again nearer to 0.236 level. So this probably is much more easier, even if you take a trade maybe at the end of the day over here, because you think that the market next day would be going up. It may happen, right? When you get into a trade and the market starts moving up in your direction, right? The first thing is, you should trade your stop loss immediately to your cost, because my first important fundamental is saving or keeping your capital intact, right? So let's say, for example, you have taken this as your entry, right? Once you have taken an entry, probably what you need to do is, you need to have your stop loss placed over here. So this is going to be my first stop loss. I understand the terminologies are very different altogether, right? Why the terminologies are different, I'll just tell you. Because at this stage, you are probably making your losses. You would be making losses, right? Because you're going to make your losses, you need to stop your losses, and that's why it has been called as stop loss, right? So only first time when you take a trade, the second most important thing after taking a trade is putting down a stop loss, right? Very important, because once you have an entry into the market, you need to know where exactly you need to exit. And they should be very mechanical, very mechanical, very mechanical. And again, like to re-emphasize on that, once you take an entry into the market, the second thing that you should be doing is putting a stop loss on immediate basis, right? What I do from my side is, if I take an entry over here and if the market is getting down, maybe by few points, 10 point, 15 times, I immediately get out of the market. I'll tell you why. Because I again look for some entry which is probably, I have taken a risk and I want to keep my stop loss very small. If I'm not able to get that right entry, probably I'll wait for the market to give me some kind of price action, and then I will try to re-enter into the market, right? Here, if I have taken a trade, probably I'll wait for the market because it has just opened about 0.5, right? If it is goes to 0.5 level, probably I'll start trailing my stop loss. So my stop loss probably will be hit over here. I'm still making profits, right? Second thing is, after that, when the price comes down, right? If it is coming down, if it gives me an indication in the form of price action, I'll be again taking an entry over here, right? Because I know this is my range. My target would be 1.27 to 1.618. These are my targets, right? It's okay if you hit your stop loss, but it is very important that you keep your capital intact, right? When it give me a price action over here, I got an entry over here, then the market starts moving up, right? So initially, when I got an entry, maybe if it comes down to 0.236 level, this is where my entry point is. So I mostly look for entries at these levels. because I know the market does come down till that part, right? Second is after that, I trail my stop loss. If I get an entry at 0.233 level, and when the market starts moving above 0.5 level, I immediately trail my stop loss to this second level, which is 0.5 level, right? Let's see how the market goes. From here, it did go up. It gave me some kind of resistance, which is there at 0.76, right? If it closes above this, probably I'll be on a safer side. But because the market has already given me a resistance, it has kind of given me a double bottom over here. So double bottoms are very critical. At times, it does give you a support also. So very important to know about this. I'll be on a positive part that the market would be moving up, right? So I don't trade or maybe close my trade over here. I wait for the market to move up, right? Once the market has moved above 0.76 level, excuse me, right? I after that trade my stop loss to 0.76 level, right? So once it has moved above the first level, that is level 1, I'll trail my stop loss to 0.76, right? So this is my first level of entry. Probably if I get an entry over here at this part, this would be my stop loss. Only at this level, this is being called a stop loss. After that, it is accumulating your profits or keeping your profits intact. See, the terminology is different. Maybe it is called a stop loss. Why? Because it was being used previously, and that was to stop your losses. But once you have an entry, maybe at this location, after that, you are getting profits. So you need to keep your profits intact. That is the most critical thing, right? So first, initially, when you get an entry, this is your stop loss. After that, probably once you have and the market starts moving up over 0.5 level, this should be my stop loss, right? Once it moves above 0.76 and goes up, this should be my stop loss, or just below this 0.76 level, because market at times does come down. And after that, it goes up. Once you have attained 1.272 level, you have to look at the price action. If the price action gives me any kind of hint that the market is reversing, you just move out of the market. That's it. Very simple as that, right? For example, if you see over here, yes, this was a range which has been formed, you got a reversal, right? After the reversal, it crossed 0.5 level, it went up, right? It got a resistance exactly at 0.76. We saw in the smaller time frame here also, we got a resistance at 0.76, but it doesn't mean that, okay, it will be coming down, right? Because first day also there was a resistance, second day also there was a resistance at this levels only, which is 0.76. So you need to wait, let the market go up. Again, the market started coming up, right? Once it has tossed over here, my stop loss would be trailed at 0.76. Again, let me just put down those levels. Right? So when it moves above level 1, my stop loss would be trailed to this, right? So after crossing level 1, so for level 1, which is the level 1 of Fibonacci, this would be my stop loss, or just below this 0.76 level, because that market does come back, tries to take a support over here. Once it crosses over here, once it is at 1.272 level, I'll just look at the price action, how that has been happening, and try to move out of the market if it is reversing from 1.272 level, right? Simple as that. And from here, probably I got a exit at 1.1276, which is 1.272 level. So whatever has been accumulated, that is my profit, right? Now, understand one important thing. Whenever market goes one step further, again, at second part, it will be coming back. We'll look this into various time frames which are there. Right? See, for example, This is the daily time frame, which is the current one. Current one, this date is 17th of June, right? So market started from here. It gave a completed range one, came back, and it completed a retracement again at 1.27, right? So this was my first part. If I see a second range, maybe I'll take this low and consider this high. Again, there would be a reversal, which would be coming back and completing a target of 1.618, 1.27 to 1.618, either way, whatever is there, right? And then the market again starts moving up. So once this cycle has been completed, you have a reversal cycle also. So this is a daily time frame. This is a monthly time frame, which has been there, right? We'll take them further examples also, but you need to know, once you have taken an entry, you need to keep on trailing your stop loss. And once you know that, okay, it has crossed above one level, 1.272 level, you need to keep on trailing your stop loss. You can also exit over here, because at the end of the day, when you know that, okay, boss, the market is not moving up beyond a certain level, move out of the target. That's it, because you have already gained some points which are there in the market. Let's say from here onwards to here, we got somewhere around 300 points. 300 points in 1997 was a good amount and good point, which is there, right? So very important to trail your stop losses. Again, when you see in the reversal part, your same reversals have been happening. Now see, this is one cycle which we are seeing on the monthly part, which is there of 1997. And this is a cycle that we are seeing, which is of daily, which is of 2022, June 2022, right? So see, some cycles which are there, those are been formed in a similar way. For example, this has completed Fibo 1. This has completed Fibo 3, right? So these are all levels which have been happening. See here, that is this is Fibo 1, which has been completed. Fibo 2 is the range part, and Fibo 3 is the reversal, which is there. So very important for us to know about these parts together. Why? Because this is how the market does work and sustain. And why to trail your stop loss? Because you know that after a certain time period, it will be giving you a reversal. So first thing is, if you are an option buyer, you should just keep on trailing your stop loss, because there will be theta decay, and theta decay won't be giving you anything, right? If you are an option seller, probably you can look for a time frame where you know that, okay, if you are getting a reversal, after that you can move to the market, otherwise not. Or if you are for a bigger time frame, yes, you can wait till the retracement and then the market starts moving up, depending on the time frame which is there for you, right? So this is one example that we saw. Let's see some few more examples. Let's say, for example, this one is there. I'll just take this Fibonacci, maybe few points further, and extend this one just to have a glimpse of the market. Again, these are monthly charts, right? So let's say you got an entry over here. Yes, probably this a good indication. Why? Because once you know that a range is been formed, you'll always get this kind of price action which is there. So this is probably and signal. And after that, when you get a retracement, this is your confirmation. So you can mostly trade on this part, right? So once you have an entry probably over here, your stop loss becomes very small, and probably the low over here is your stop loss. Right? So that's why I told you I keep my stop loss very small. Why? Because I know this kind of retracements have been formed, and these are very critical. So This is my stop loss, and this is the only way point at which it has been called a stop loss. Right after that, the market starts moving up. Right, it goes and let's see. Try to see. Excuse me. Where the market tries to take a support from here. Once it has moved, it crosses 0.5 level. It goes up. After going there, it comes back. And where does it take a support? It takes a support at 0.5 level. Right? It doesn't go anywhere else. It will be always coming to those levels. Try to take a support over there and then work. So once you have a stop loss, probably moving above 0.5, your stop loss would be always below 0.5. And once it starts moving above 0.5, probably you can then start trailing your stop loss further. So here we won't be calling a stop loss, but trying to optimize your profits. Keeping any profits in your pocket is very important, but you need to know how the market functions. So we are seeing how the market is functioning over here. So we got a pullback, which is there again at 0.5 level, right? After that, the market starts moving up. So you got a resistance, which is there at 0.76. The market did come back. Again, you got a second resistance. The market did come back. You got a third resistance, but the price was gradually moving higher side. This was a low, higher low, higher low, higher low. So gradually the market started moving up. So you need to know this on the basis of time frame or maybe price action. How is the price action? This is my high. So this is my low, this is my high. So if you see over here, the market did go up. It took a support again at 0.236 level. It started moving up. Right. So this was my low, this was my high. Again, it came down, took a support at 0.236, took a support at 0.5, took a support at 0.786. So in the smaller time frame also, if you see, you'll be getting the price action in a very similar way because the market is very precise. Very precise. We only need to understand how the market functions, nothing more than that. Right? So first one, second is 0.5, and after that the market starts moving up. Right? Once it starts moving up beyond a part, probably you can just start trailing your stop loss further. And let's say, for example, so this was my third stop loss, right? And after that, the market started moving up, and probably maybe at this level, when you know that there was a previous high, you should start your trail or stop loss much more nearer to that because it does at times come that market be coming back at those levels. Why this is critical is because the previous highs always act as support and resistance level. If we'd have given me a crossover from here and went up, probably that would be then acting as a support. Why? Because the market would be coming back over here, then taking us up at these levels, right? So it happens, nothing like it. If it doesn't happen, just trail your stop loss at this part. Why? Because you need to keep your profits intact, right? So from this cycle, if you see the first resistance or maybe my entry was at 0.236 level. After that, it took a support at 0.5. After that, it took a support at 0.786, which we are considering as level 8, right? So the pattern is 2, then 5, and then 8, right? This is how it is, and that's why we call this pattern of support as 2, 5, 8 support levels, because this is how the market has been functioning. See, we are not looking for anything on our own, right? We are just trying to look at the market, see how the market has been behaving, and we are trying to take interpretations on the basis of how market is been behaving, and we give reactions, our own reactions, on the basis of how the market is moving. See, we don't have to predict the market, we have to react on the basis of what has been happening in the market, because various people have various perceptions. They always say that, okay, how is the market going to be there? It's going to be high, low, it's going to be where the market is going to go from there. No, you don't have to look at that part. What you need to only look is, have you got a proper range? That is the first part. If you've got a proper range, Probably after that, you need to look for an entry. And after that, your stop loss. That's it. That is the only concern that you should be having. So once you have got a price action over here, you should be getting an entry, right? Once you got an entry, after that, if the market goes beyond 0.5, takes a support over here, probably your stop loss should be just below the 0.5. Once it crosses above 0.76, right? Or if it gives you a price action where it says that, okay, fine, market is not going to go above this, you can trail your stop loss to that part. But here, if you see in terms of price action, yes, probably it gave me some kind of resistance, but the next day resistance was positive. It gave me a closing above, 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 right? So I keep trailing my stop loss further. Probably if this was the low, this was the low, I'll trail my stop loss over here. If this was the low, I'll trail my stop loss over here. If this was the low, I'll trail my stop loss over here, right? Because if you see further, this is like a rising wedge which has been formed, right? So you need to know probably a reaction will be formed over here. But what happened is ultimately the market gave a breakout, went up, right? So very critical. Once you have a breakout, probably start trailing your stop loss to the next point, right? Let's see some more examples. This one is probably right. I'll extend this. That's a line. To 33. Okay, cool. Right. So this was my previous low. This was my high. So 0 to 1, that is the range which has been considered. The market did try to come down. It came out or gave me a support at 0.5. This is my signal. It gave me a confirmation in the form of price action, right? So this was my price action. So price action being formed, it gave me a support at 0.2. So this is my exact level of my entry, right? And my stop loss is below this line, right? So you got how we need to get an entry and how to get a small stop loss, right? So this is my entry, first part. And then we see for the ranges which is there, right? So from here it went up 0.76, it did started going up, right? See, now what happens over here? It started moving up, it started moving up, it started moving up. It didn't cross the one level. It did come back, right? At times it will be coming back, right? Now, how to know about that is you get a confirmation from maybe over here that a range has been formed, a reversal has been formed, and it will be coming up, right? So if you're getting this kind of reversals, maybe in terms of the price action, move out of the trade and wait for a support which has been formed at the bottom so that market starts moving up after that. This is very important. If you're able to know these things should be much more easier for you, because every now and then the market would be giving you reversals. The market always gives you reversals, right? And most of the people do keep your stop loss probably at levels that they're not aware about. So always understand market would be giving you reversals. If you are not aware about these reversals, things would be very difficult for you, right? Probably if you see, this is the small retracement cycle which has been formed. For example, this is the low, this was the high which was been there. There was a reversal. After the reversal, the market did start moving up. Yep. Right. So there was a low, there was a high. Market did come back. It gave me some kind of retracement which is there. Let me just probably move this for the time being. Then we'll be having different prices. Yes, clear about, see, low, a high, retracement, market did come back, again a second retracement, right? The retracement was again somewhere around at 0.5, took a support at 0.5 and then started moving up, right? So very important, try to know how the market has been working, right? So as I told you, yes, first is 0.5 where we take a support, 0.76, let it come back. Let it come back. See the closing. The closing of the market has been 5471.8. It has been above this 0.76 level. So this again gives me a confirmation that the market will be going up. If you see the opening of this has been 5480, again above this level. It did come back for back testing maybe, or maybe completing this small retracement, going up. But that is how the market functions. You need to take these small risks. Once you have taken this support at this level, market again starts moving up. See again coming back, it took first of all initially a retracement over here. It came back, gave me a small retracement and then gave me a big breakout. So wait at times which are there critical. Now here the market didn't go up to 0.236 level, but it came back from 0.5 level. So if it is this is the support or maybe your entry at that level, then the market move up gradually, right? Have some patience because the markets will be giving you retracement. The market will be giving you first retracement. The market will be giving you a second retracement. Once the first and second retracement have been done, after that the market will start moving up. Very critical to understand, right? So after that, just keep on trailing your stop loss to 1.272, 1.618. I'll just mark this 1.272 level also. 1.272 level, 1.618 level, right? So it came down, took a support again at this level, and then started moving up. And in the reversals, yes, definitely you'll be finding the reversals in a similar way. Just put it maybe on the right hand side. Right hand side is for the levels. Sorry, left. Right? So it made a low. It gave me a reversal. This reversal was again at 0.618 level, right? 618 level, it did come down, right? Again, it came back. It came back somewhere around at 0.5. Sorry, this is 0.382. I beg your pardon. It came back. It came down to somewhere around 0.618 level, nearer to 0.5 levels. Came up, and again the market started moving up. So this can be a range which has been considered, or probably this can also be a range which can be considered. If you consider this as the range, this is 0.5 level. So this is more accurate, right? 0.5, it came down, pull back above 0.76. Next day came down, moved below 0.76. So once it starts moving above, or maybe in this case below 0.1 level, then you can start trailing your stop loss to 0.76 level, and then your target completion, right? Some more examples, or probably this can be a very good example. In terms of coordinates also, 1.272, 1.618. Why? Because I've traded this, so that's why I'm actually there, right? So this was 2 level. It gave me a signal over here. And if you see in terms of price action, probably there was some price action which gave me a reversal, and then the market started moving up. So these reversals are very important, where you can take an entry, right? So If this is my entry, right? So this gives me an entry point. After that, this is my 0.76 level. So see, understand. Again, same kind of projection, creates a resistance, come back, takes a support about 0.76, then it starts moving up, right? So the pattern which has been formed is 0.236, then the next one is 0.5. See, understand. Try to make this, let me just take this on the right hand side so that is easier for all of us to understand, right? Yeah, better now. So 0.236 level, which was there, right? After that, the market did go up, right? Went up from here, came back, took a support at 0.5, right? Again, went up, tried to cross 0.76 level, came down, took a support at 0.76 level, right? Took a support over here, and after that, it started moving up. Once it crossed from here, it crossed level one back testing, 1.272 back testing, moved above it, 1.618, took a support, went up 2 level, right? So slowly and gradually, you need to understand how to keep your stop loss. And on the basis of that support level, which is there, which is 2, 5, 8 levels. If you are able to follow these levels, things become much more easier for you to understand, to know what kind of a time frame you use, or maybe what kind of support system that you need to have. Because if you know this natural stop loss trailing which is there, because this is not which is we have found out or something like that, this is just what is being present in the market, right? This is what just is present in the market, and we need to work only on the basis of that, nothing more. We don't have to do anything else. We have to just see how our stop loss have been traded. 0.236 level, 0.5 level, 0.76, which is 8 level. So that's why we call this as the 258 support level. Once this 258 level is been crossed, the first target generally is level 1. If it crosses level 1, 1.272. If it crosses 1.272, 1.618. Right? So even if you trail your stop loss at this part where you know that okay, the market is going below that, but try to understand how the things have been happening. See, here also it went just below 0.236. Here also it went just below 0.5 level. Here also it went just below 0.76. Though it would happen in the same way that it would be coming down probably at much of the levels. Right? Again, at level 1, if you see, yes, probably it has been taking that kind of resistance. But those resistance will be always formed at those levels. And this will be always happening in that way. Right? So ultimately it reached a target of level 2, and from there I got a reversal. Again, if you see check for the reversals, probably the reversals are again happening in the same way. Low 0.236, right? So this was my high. I got this low, and again I got a let me just probably bring this to the right hand side. So I'll bring all the levels on the right. Yes, much more better now. I got a range, I got a reversal again 0.236. So it went just beyond 0.236. Second one was 0.5, so it was very intact. It came, see, it came down, took a resistance. The resistance was very intact. was there at 0.5 level, right? And after that, now we are getting a resistance which is coming back to 0.76 level, right? So this is there for the entire range also, starting from 0 to 1 and coming back. So probably this level is going to be very critical. We'll probably try to understand this in the monthly webinar that we'll be having. Probably I'll be bringing this today, end of the day, or maybe tomorrow, and try to explain how the markets have been reacting at this stage, because there are some very critical updates which are to be given. But at this time, just to summarize about this part, once you have a range which will be informed, after that you will be getting a reversal. The reversals will be giving you supports for trading into the markets, and these supports are at 0.236 level. Then the market does gradually start moving into the direction of your trade. At this time, it has been called as stop loss, right? So this is your stop. This is below this is your stop loss. You'll be definitely getting price action over here, right? Let me get down into the weekly chart. So see over here, it did try to go up, come down. If I see into the daily chart, see it went up, it came back, and probably over here will give me a resistance. So this kind of resistance which are there gives me that kind of confirmation, right? So 0 was there, 1 was there, and it came back to 0.5 level, and then it started moving down. Right? This is how price action is being formed, and this is always be happening in a similar way. So 0.5 level, and then it started moving down. Right? So this is how the market behaves. You need to know the exact details, how things have been happening. So my support levels are 0.236, which is level 2, then 0.5 level, then the next level is 0.76, which is now coming down, and after that probably the market starts moving in the direction, right? So we saw various examples where we saw our entry should be there at 0.236 level. Of course, you should be getting into a smaller time frame to see this price action which has been happening. The price action is very important. Once you know the price action, things become much more easier for you to understand. So this is more like a signal. You don't have to trade on the basis of the signal, but always on the basis of confirmation. Once you have a confirmation for that part, in smaller time frames, you get an entry over there, right? Just like I showed you over here now. So probably this was the entire range which was being formed. This is the signal which has been given. And after this signal, I'll be getting a confirmation in the form of a price action over here, which is again in a similar way, which is like unit of technical analysis. So I get an entry over here and then start moving down for the bigger time frames, right? So just to summarize all the things together, for chapter 7, it is 258 support levels, right? Once you have probably an entry, see here, your target should be on bigger part, which is 1.27 to 1.618, right? So once you have an entry, right, after that, wait. Once you have an entry, your stop loss should be just below the low over here, which has been formed, not the all-time or maybe the previous low. No, not that way. Let it form a low, let it give me a price action, and I'll keep my stop loss below the low. I don't have to catch the low. I have to catch the higher low, right? Clear on this part, which will be coming either at 0.5 or 0.236. I take an entry, keep my stop loss. I'll put this a red line. So this is my stop loss. Once it has a stop loss, after that, this would be keeping my profits in my pocket. So let it move up. Once it moves up, this would be my stop loss, which we assume is going to be keeping profits in my pocket. Again, price action, when it starts moving above that, after that, I'll keep trailing my stop loss when it moves above level 1. Once it moves above level 1, my stop loss will be there at 0.786, right? After that, once it starts moving above level 1, probably I'll just trail my stop loss below that. It moves above 1.27 to 1.618, start trailing your stop loss, because whatever profits you have earned till now, you need to keep that in your pocket. Very, very, very important. By doing this, you'll be first of all increasing your capital. Why? Because you're getting extra profits. Of course, your capital would be intact with you, but with that, you will be increasing your capital. Why? Because you're making profits. And the most important thing after keeping your capital intact is to book your profits or to save your profits, right? Okay, thank you so much. And try to see other videos also which are there previously before that, because it's been a long time. So once you know about those things also, things should be much more easier for you to understand.